this is the fun part right here. Look at that. There she goes. So, all right, what's going on, guys? Tremaine here. Here's the trade today we took on stream and Discord, shorting inside of those two up close candles. Okay, I'm treating that as a bearish order block. And I was expecting a pretty large range day today. Yesterday, we had an inside trading day, meaning we couldn't take out previous day's high or previous day's low. So whenever that's the case, either the next trading day or the trading day after that one, I'm expecting a large range. So because we had an inside day yesterday, I was expecting a lot of movement this morning. And my stop loss is above midpoint of that large 1 minute fair value gap. Just talking to the group here about the bearish order block. The ideal entry for my short was that first fair value gap after 8:30, that purple box. I'll go back to it. That purple box up there. That's your first presented fair value gap after 8:30. That's what I wanted as a short, but I got to the stream a couple minutes late, so I missed it. And this was kind of like my next opportunity to get on board. So me and the crew were just watching this, and I'm eyeing the 5-minute chart because, and that's the sell side I'm aiming for, but we're about to form a fair value gap here on the 5-minute chart. So I'm telling the members that once we form that 5-minute inefficiency, I prefer for that fair value gap to stay open, or at least the upper half of it. So we're sitting in this retracement, and that's kind of in the back of my mind. So I'm telling them that my stop loss is above the 5-minute fair value gap, drawing it out there. And I expect that to either stay open or, again, the upper half of it. 5-minute SIBI, sell side imbalance, buy side inefficiency. All right. And what you're going to see me do here, and my partials always have to be a 2-to-1 risk to reward, so I'm just measuring that out. It's kind of a rule I have for myself. But I'm talking about that small little SIBI right there. I want to see that be treated as a reclaimed fair value gap. We'll talk about that in just a moment. And I'm talking about that 8:30 entry. That's my ideal short that I missed. All right, so that fair value gap right there. What makes it a reclaimed fair value gap? Well, at first we want to see that fair value gap take us lower, right? The fact that we traded above that SIBI, disrespected it, and now we're back beneath it, I would want that to offer resistance. So I'm telling the Discord group here that that's what I'm eyeing down. And then that fair value gap on the 5-minute chart, on the 5-minute chart staying open. So everything's looking good here. So that's what makes that fair value gap reclaimed. It failed to be used as resistance primarily, but now if we're back beneath it, I would want to find resistance there, treat it as a premium array. So right here I'm watching it. I have my finger on the manual close button because you see me playing with that reclaimed fair value gap. That's kind of like my last line of defense for lower prices. I think if we're good to go lower, we should respect that. And you can see the body stopping at the low end of it, and I didn't know I was talking about it that much, but really explaining the significance of that, annotating the bodies. Now, what you're going to see me here do is I'm annotating midpoint of that wick. That's consequent encroachment. And I'm telling the members that if we get a nice strong close beneath that, then I'll feel comfortable taking off my risk. Until then, my stop loss has to stay where it's at. But there's ES and the Dow all making lower lows, so everything's in sync. And this is the best part of the trade here, making it risk-free. Now that we've closed beneath midpoint of that wick, and you see me labeling the reclaimed fair value gap, it was used as resistance beautifully. And we had no interest in trading back up into that 5-minute inefficiency. So I'm highlighting this entire up close candle. That's a bearish order block. That up close candle that I used for the midpoint of the wick, that's your order block. This was a really great day on stream, back-to-back winning days, Thursday and Friday, after taking Wednesday off. So really, really fun trading day. We love being done early in the morning before, well, the opening bell. Spoiler alert, I guess. So I'm telling them that my stop loss is above that 5-minute bearish order block. So I'm not really interested in trailing my stop too aggressively because I think it's perfectly fine if NASDAQ wants to trade back up to that opening price on the 5-minute chart. I believe that was your 8:45 a.m. candle on the 5-minute chart if you want to go look at that. I'm sure I'll reference it again in the video. And there's my partial. So 8 out of my 10 contracts are scaled out. And now I'm telling the members which targets I'm looking for now, which is that sell side. And they're going to see me get consequent encroachment of that wick there, that long wick getting midpoint. And that'll be another partial for me as well. So 15-minute discount wick, consequent encroachment is what I have it labeled as. And there's that 5-minute bearish order block. My stop loss is above mean threshold of that. So that's why I'm not in a rush to trail my stop, because I don't want to trail it prematurely. Me reminiscing over the entry that I should have had, but it's all good. Right, everything in the chart, all the feedback looks good. Everything still looks heavy. I'm teaching the group about the order flow signatures. On my free mentorship here on YouTube, Lecture 2 covers order flow signatures. We're seeing that in the chart, the fair value gap staying open, the speed underneath lows, violating discount PD arrays. Those are all order flow signatures that I taught in Lecture 2. So if you're new to the if you're new to the channel, or if you haven't watched the free mentorship that I have on my YouTube, I have a playlist titled Free Mentorship. Lecture 2, this is textbook straight from that video. Part of the main reason why I was confident going short this morning. $19,500. I was going to aim for that. I'm telling the group that I think we can reasonably reach that as a draw. That's an old new day opening gap high. And I'm showing them that dollar index is bullish. And if dollar index is bullish, then I would expect lower prices in NASDAQ. So I'm explaining to them that I like how everything is in sync. Those are the low resistance market conditions that I like to trade. And I slapped on a new day opening gap right there. Want to see that be used as resistance to take us lower. And then I adjust my TP back up. I was tired, still am. I'm recording this review right after we just got off stream. But I was trading London last night. I shared that execution in Discord, just London practice. MNQ had a very nice market maker sell model. So I was trading that, and I really didn't want to be on the chart too long. So I let them know that I think 19,500 can be a draw for today, but I'm content with 19,600 as a sell side draw. So I'm going to highlight the bullish order block on the daily chart, that up close candle right there. I'm looking at the low all the way to the opening price. I'm looking for a sensitivity there. And that low, the daily order block, is annotated as sell side liquidity, but it's also the low, that up close candle. So talking about the new day opening gaps here. And then we called this move before it happened during the macro. I told them that 850 to 910 macro is one of my favorite macros to trade. It usually always gives a nice setup pre-market. And you can see the delivery we got during that 20-minute window was very nice. Right here, I'm telling them that 15-minute fair value gap, I'm treating that as a breakaway gap. Don't want to see that traded to balanced price range there, and that small 15-minute fair value gap right there. I prefer for that to stay open. Just some order flow signature things that's already covered in the mentorship playlist for free. So took a little bit of heat on this trade, maybe like 10, 12 points or so, not too bad. Working the low end of that new day opening gap. And you're going to see me put on the reclaim fair value gap there. It's a good teaching point. And I'm taking a partial there underneath that swing low. See all those small little short-term lows there? We're running down sell side, so I'm running down my equity. Okay, every time we take out a short-term low like that, we're engaging sell side. So I'm taking a partial underneath that low, and that's a nice 63 handle partial. There's your bearish order block, your 3 consecutive up close candles. Okay, we tapped the opening price beautifully, and you see the reaction off of it. And now I'm just holding out for that sell side target, trailing my stop above the new day opening gap. And I'm explaining to the group that I think our work is done using that new day opening gap because we failed to reach midpoint of it before breaking lower, creating the order block. So I like where I'm positioned. And this is the fun part right here. Look at that. There she goes. So back-to-back wins in the Discord group, ending the week on a high note. It was a really fun week. FOMC did not disappoint. But yeah, love you all. Hopefully you enjoyed, and I'll see you on the next one. Peace.